Senate Republicans unveiled their draft of the GOP tax bill with some crucial changes from the House version, including a placeholder for the hotly debated SALT cap. Yahoo Finance Washington correspondent Ben Werschel has more on the details here. Break this one down for us, Ben.
Yeah, Brad. So the Senate released this version last night, 549 pages long, and two pieces jumped out immediately as clearly the most politically contentious. You mentioned the SALT one. So this was a reduction in the SALT credit. The House passed a $40,000 credit. The Senate version does make it permanent, but it's the current $10,000 credit. The SALT caucus has already said it's going to be $40,000 or we're going to sink the bill. So that's going to clearly be a point of a lot of conversation in the weeks ahead. The second is these Medicare cuts. This bill surprised a lot of healthcare experts by having kind of more aggressive measures on Medicaid's tax structure. Basically, this would hit rural hospitals, especially, are one that come up a lot. This would hit them, that could hit them hard, and already has some opponents, even among Senate Republicans there on the Medicaid side of this. So that's going to be another point. There's also a lot in here, kind of a little bit below the radar, on business world provisions that I think will be a focus to business owners. The big one here is a Senate priority from the beginning, basically since they got the keys to this bill, to make some key business tax deductions permanent. This is things like R&D expensing, new factory construction, interest expenses. The House version had versions of this, but the Senate version does make it permanent. This was a priority for them, but it will increase the price tag. There is a key kind of sort of semi-loss for business interest in this bill, which is this idea of a revenge tax, which was introduced in the House version. It allows the president or any administration to levy taxes in response to foreign taxes that they don't like. The digital service taxes in Europe are a big focus here for President Trump. That remains in the bill. It's been pared down a little bit in return to these interests, but there's a lot of fears that if that goes through in some form, it could lower multinationals' interest in investing in the U.S. if you have a foot in both countries and you're worried about these revenge taxes. So a lot of pieces here. The goal here is to get this through among Republicans, is to get this through by July 4th. There's a lot of, as I laid out all these issues, it's a heavy lift for certain, but they're definitely going to be talking about this a lot in the coming weeks.
Yeah, Ben, the White House also has contradicted economists on how much the bill will cost. So how are they arriving at such different numbers here?
Yeah, so we don't have a score yet or a analysis of the Senate bill. It just came out. They have to go through that line by line, but we do have one for the House version. And the consensus amongst economists is that there's about a $3 trillion over the next decade price tag associated with this. This is because, as you can see on the screen there, those tax cuts will cost a lot of money, and the White House is basically offering a whole different picture of this. It's sort of a three-step process which they change here. First one is to sort of eliminate those tax cuts entirely. That's a long-standing Republican argument, belied a bit by history and previous tax cuts, that basically tax cuts are free, that if you reduce taxes, the revenue increases by the same amount, so it's free. That's their first way to change this. The second part is to offer really aggressive measures of growth. We're talking 3% growth, not just in the next 2 years, but every year over the coming decade. That's a really aggressive growth that the White House says they're confident will happen, but others are a lot more skeptical. So if you have a lot more growth there, that adds another $4 trillion onto their price tag. And then the third piece here is adding in tariffs. There is a CBO report from the Congressional Budget Office about tariffs potentially bringing in $2.8 trillion over the coming decade. But that means the tariffs have to stay exactly as they are, both in the coming years, as well as after Trump is scheduled to leave office. So that's created an $11 trillion price difference between kind of what economists say and what the White House says. And the expectation for the Senate bill is that it's not going to be a huge difference in price. There's some things that increase the cost, some that'll lower it, but we're still talking a multi-trillion-dollar price tag. So we're still talking a big gap between what the White House is going to be saying over the next month and what economists and even some Republican fiscal hawks are going to say over the next month.
All right, much to continue to track over that period of time. Ben, thanks so much for breaking this down for us.